Hey, how's it going, everybody? Just wanted to do this quick video this evening. If you don't know who I am, my name is J.R. Edie, realtor, do credit, things like that. You may have seen me post it, so I appreciate you guys for tuning in. I would say I would give it a couple minutes for everybody to get to come on before I start. But let's see what we got here. I'll just go ahead and get started anyway. So the reason why I'm doing this video is to kind of dispel a few things in reference to down payments and the actual amount, because a lot of people who inquire about the home buying process, they may think certain things as far as the amount either being nothing or the amount being extremely high. I've heard it from both spectrums. Many realtors have heard it as well. We've heard as far as, many people thinking they can't afford a home or a mortgage because they're believing that they have to put down $20,000-$30,000 or something like that. And that's not necessarily the case unless it's just particularly geared towards that price point. It's not always the case. Other people on the other spectrum as well will think that they don't have to put down any money at all, and that the home buying process is just as smooth as just, I want to buy this house and I don't have to put any money down, or I don't have any money reserved. But it's not quite that way as well. So I just wanted to address this just to kind of explain some things in reference to that. It's not as difficult as many people think it is, or you don't have to have as much money as many people think that you have to have. But there are inherent costs when you're trying to purchase a home. It's not just a down payment. You will have other costs involved as well. One of the big issues right now, if you don't know, it's a seller's market. The inventory, especially here where we're at in the low country, is I'm pretty sure it's all across the state, probably all across the US because of this pandemic situation going on. But the inventory is very low. So it's a seller's market. So a lot of the stuff that you may have been able to ask for the seller to cover may not exactly be the same today. And you may not be able to get it because it's more competitive and there's more people submitting offers because of the lack of inventory. So just wanted to make that. Let me turn this sound off. Move my live here. You're not going to have a lot of times the same thing. So you have to be more competitive when you're submitting offers, or when you are submitting an offer for something. So let's get into it. I'm going to share my screen here just to cover a few things. I got my little presentation I did up here, and then I'm going to take some questions. If you guys got any questions, throughout the time, or afterwards, just shoot them. I can see your questions here on the side. I got a little thing here, so feel free to ask those questions. So I'm going to go ahead and share my screen. Let's escape. It's funny when you going live, then all of a sudden stuff don't want to work. So let's get back on here. All right. All right, hopefully y'all all can see this. So the basics for one is I'm going to just cover a few loans here, the typical loans that come when you're trying to purchase a home. So one of the most popular ones that you hear about is the FHA loan. With a FHA loan, here you're looking at about 3.5%, in terms of the down payment for an FHA loan. Now, this could, if you got a lower credit score, if you have less than a 580, and when I'm saying 580, we're talking about your middle score. If you have less than a 580, you still may be able to qualify for an FHA loan. You just may have to put more down. This 3.5% is just that once you hit that 580 mark. But if you have like a 550 or something, less than a 580, you could be looking at 10, 15, maybe even 20%, depending on your credit profile, for one. So just keep that in mind as well. Go on here. So just keep that in mind. You may be looking at something like that. In terms of USDA, so USDA, if you guys aren't aware of that, that's another HUD product as well. USDA is no money down. So with the USDA, you can only purchase in some locations. It's more so for rural areas, and they're a little more conservative when it comes to, you know, your debt to income and the cap as far as your income and the amount of house that you're purchasing. So what you get qualified for USDA may be a lot less than what you may qualify for an FHA loan, if that makes any sense. So it's no money down, but it is a little more strict on debt to income. Like I said, it's usually, I believe it's 41%, if I'm not mistaken. I'm not a loan officer. I'm not a mortgage loan originator or anything like that. I'm just going off my knowledge, my basic knowledge I have. So don't kill me when it comes to this. So it's no money down, and it's 41% debt to income, as opposed to FHA, which was 55% debt to income. So that's that. And when I say rural areas, there's an actual map, which I can pull that up here. If you guys want me to, I can pull it up and show you the map. I've done a video on that as well. That can kind of show you the locations, depending on your state. But, you know, in this, for particular reasons that we're talking about now, for South Carolina, they have an entire map that shows what areas are USDA territory and what isn't. So anyway, going on to the conventional loan. So a conventional loan, you can go as low as 3%. You know, debt to income is, you know, its own thing when it comes to that. The down payment can go much higher than that. You know, it just all depends on your situation as far as that. So I'll just leave it at that in terms of a conventional loan. Conventional loan is not a government loan. It's a private loan, so it's not insured. So you'll have to get your own private mortgage insurance for that, which will be a little bit more. The VA loan, for those of you who are veterans, the VA loan is no money down as well. So it's typically, well, I believe it's a 500 credit score, but you're looking at a hard time getting approved for something like that with a 580 credit score. So just keep that in mind when it comes to that. So the other thing with these down payments, if you're looking at putting down more on a house when it comes to a down payment, how that's going to affect it a lot of times is that you have to look at, for every, and this is just a approximate amount, depending on your interest rate is going to, you know, kind of determine what this is. For every extra $1,000 that you put down, or for every $1,000 is usually only $5 to $10 as far as your mortgage payment goes. So I'm not saying this is an exact, but this is an approximation. So if you're looking at putting an extra $10,000 down, you're probably only looking at about $50, approximately around $50, depending on your interest rate, extra on your monthly mortgage payment. So that's I just wanted to cover that in terms of that. So just keep that in mind in terms of down payment. So the difference between a 3.5% and a 0%, that's what you're looking at for that. Your down payment, in terms of these amounts right here that I'm covering, does not include closing costs. Closing costs is something completely different that you guys need to be aware of. Closing costs can be another additional 3% and up. And like I said, once again, because it's a seller's market, the actual closing costs, sellers know that, you know, it's not really something, because there's so many offers that may be coming in on that house. You know, buyers need to be more competitive and offer the best offer, or submit the best offer, not offer the best offer. That's so redundant. They need to submit it, but that doesn't mean that they're going to cover the closing costs for you. I believe sellers can cover up to 6% of the purchase price. I believe that's what it is. You know, don't quote me on that, but I think it's up to 6% is what the seller can pay towards of the purchase price towards the closing costs. But on average, it's around 3%. What are closing costs? Closing costs can be taxes and insurance, fees for the attorney, origination fees for the mortgage loan officer or the lender. All those things are included in that 3%. So this is something completely separate. Just keep that in mind. You need to be prepared to have that. This is something completely separate than the down payment. So you're looking at, if you go FHA, if we're looking at FHA, let's just say worst case scenario, that's 3.5% plus this 3%. So that's 6.5%. So that's, you're just looking at that off top. And I'll get into a calculator just, here in a few, just to show you guys that. These amounts that I'm talking about right now, it does not include your earnest money. What is earnest money, JR? I'm glad you asked that question. Earnest money is similar. It's a good faith deposit. It's similar to a security deposit. If you're renting or something like that, it's basically showing the seller that you're serious about buying this home. In terms of a security deposit, this money that you're putting down opens up the escrow with the closing attorney, or your attorney who you choose to use will hold on to this money for the most part. And it opens up the escrow and they hold on to it, and that's used. And like I said, this can change, the amount can vary anywhere from, if you're on the lower end, to 500 to several thousand, for the most part. It all depends on what the seller, what you negotiate in terms of, or what's negotiated in terms in the terms of the contract. So with that being said, it could be 3, 4, or 5,000 at the end of the day, something that could be negotiated in terms of the price point. And don't be too concerned about that for the most part, because this is not money that would be losing unless there's certain conditions which is another video, where you would lose your earnest money for the most part. But that earnest money can be applied towards your down payment. So just keep that in mind. It's not like you're completely losing that money or this deposit up front. So that money will be used either towards a down payment after the attorney has taken out their fees, or if it's all used up and let's say the seller covered all of the closing costs, it can be applied to buy down the rate or things like that at the end of the day. Your down payment does not include miscellaneous expenses like your inspection, your appraisal, other things like that. So your inspection, you're typically looking at around $300 or more, maybe $400, depending on what type of property you're buying, the size, things like that. It just all depends on what inspector you go with. The appraisal is usually around 500 plus, somewhere around that area, approximately $500 for an appraisal when you're trying to purchase a home. So this is just money that you have to come out of pocket or be prepared to spend as well. So just keep that in mind also. I'll go to this next slide here. I think I covered most of this stuff. I just threw this on here just so I wouldn't forget in terms of this. So all in all, I already discussed the closing costs, principal and interest, the PITI thing. The PI has nothing to do with the closing costs per se, but the TI does, which is the taxes and insurance. At the end of the day, they may require, a certain amount of months. They may require up to a year, everything to be paid up front. So this may affect your closing costs as well. If you have to get flood insurance, that's something that may, on top of regular homeowners insurance, if you have to get flood insurance, that'll be added to it as well. So just keep that in mind in terms of that. So just food for thought. What was I going to show you? I was going to show you something else here. So I'm going to just show you a calculator that I use other than me pulling out the general calculator, which I'll show you if you want to do it manually. So I'm going to share this screen here. I use Zillow mortgage calculator. You guys can use whichever one you want. So I'll pull this up here. So, for example, right? So let's just say we just doing 250,000. So we're doing a $250,000 house. This is just 20%. So we're not even talking about 20%. We're just going to do 3.5, right? Did that just round up? It says 8750. I'm not. I guess it's rounded. Yeah, it's rounding up for whatever reason. So I'll pull out my own calculator here soon and do that. I don't know why it's tripping like that. Whatever. So this is a 30-year fixed mortgage. So let's just do, it's 2.9. Let's do a 2.75. PMI is like if you're going conventional. So just so you guys are aware of that, I'm not going to include the PMI, but we can click on it just to see the difference. So 1277. This is just approximate because taxes are different depending on what city you're in, what county, so on and so forth. So you just put this in here. It's already came like that by default. So let's just keep the PMI off. If you're going FHA, you do have MIP, which you'll be paying, which is mortgage insurance as well. Home insurance, we got this, just an average, not to say that that's going to be your situation, but we're just putting this in there. If you got HOA, let's just say, for example, you have $50 a month for HOA. That's going to increase it as well, which all these things affect your debt to income as well. What your affordability. So if you're moving into an area or a location that has HOA, this is going to affect your payment as well. So it's something that, it's put in there for that. So this is a calculator you guys can use. That way you can kind of know if you're looking to buy what you should have on reserve. So keep in mind, even when you're buying, just because you have the down payment and all these other funds, depending on your credit profile or your credit file, you may still have to have reserves left over, because if you spend all your money buying a house, right? Let's just say you're buying a house and you got your earnest money, you got your down payment. Let's say you even put your closing costs or whatever. Everything's good, and the cash to close, you're good to go. And your mortgage payment is in like a month or so. Maybe your first mortgage payment isn't due till like a month or so, maybe 2 months, right? You're going to have to provide your bank statements to the loan officer, and underwriting is going to look at your bank statements, whoever's approving your loan, and they're going to say, well, you only have $2 left in your account. How are you going to make your first payment? I'm not trying to be funny. I'm just being serious. So if you're spending all your money buying this house, but you don't have any reserves left over, then that may be an issue as well. So these are just things that you should be prepared for. And like in the past week, and that's why I'm doing this video. In the past week, we ran into some issues here with a few of my clients. I just feel like that. A few of my clients, in terms of the money being in the bank or the amount of money being there. Otherwise, everything was fine. The credit score was good. DTI was good in terms of the house that they were looking for, the debt to income. It was just that they didn't have the money, the down payment money saved or the reserve money saved. So that basically pushes out the process till later on, which, like I said, there's always time to save up. It's just that if you really want to buy a house, you have to be focused on things like that, that this is something that you really want to do at the end of the day. So these are just some amounts I want you guys just to be aware of in terms of that. So let's put this on 0, see what happens. So if this is let's just say it's a USDA or a VA loan, and I know there's other costs rolled up into this as well, but this is just giving you an approximation. Did that even change any? Like, yeah, okay, it did. So We're gonna change that back. So that's 1305. And change it to 0. So you guys see how much it changed? This is what, $31? It only changed $31. The difference between that 3%, we'll go back to it just to show you again. So look at this payment here, for example. And that's kind of like what I was talking about in the beginning. For every 1,000 you put down or whatever. So it's 0. This is no money down, i.e. USDA or VA with no down payment, right? Let's just put it at 3.5. I know it's going to round up again, but whatever. So it's at 1305 right now, just so you guys catch that. Just look right here at this number and watch it change. So did it already change? Okay. $12.99. So it's doing some stuff here, but you see the difference just now, how much that changed. 3. So that's 305. All right, to 3.5. So it's just a matter of a few dollars. So just keep that in mind. You know, it'll just be the quicker that you pay it off in terms of the more principal you put down. That's how much it'll affect your payment. So if you're just trying to figure it out, if you don't have one of these calculators and you're just trying to figure it out, I'm not trying to like give you a math lesson, but I get asked this question by some clients, like how much is their down payment going to be? So if you just want to learn to do it yourself, and like I said, I'm not trying to be condescending or be funny or anything like that, but what you're going to do is, let me share the screen here again. Share it with this tab. I'm gonna share it with the calculator here. Right. So let's just say you got a $185,000 house, right? Just showing you some quick math. You can multiply that. Let's just say you got FHA, right? You're just trying to figure out what your payment is. That's 185,000 I just put in. You know, you're gonna multiply that times 0.035. So that's your down payment right there, $64.75, right? Just some quick math for that. You know, if you guys just wanted to, you know, learn it for yourself. Same thing with, you know, $185,000 house, 0.0, let's say it's 3%. You're going, let's say you got a conventional down payment of 3%. We do 0.03. You just move the decimal 2 places over to the left. That's $5,550. That's going to be your down payment for a $185,000 house, right? And you can kind of say that's your close. That would be your closing costs as well. So that's about what, $8,000. I mean, excuse me, not $8,000. I'm sitting up here tripping. It's about $11,000. So you multiply that times 2. A little more. So just wanted to show you guys that. I don't know if anybody, it's not that many people on here right now. I've been on live here for a while, but I just wanted to talk about that just to have you, just to kind of have you know, or to explain to you what to expect if you're looking to purchase, the amount of money that you may be having, you know, that when you do get approved, this is what the loan officers are looking for. They're looking for this, you know, these funds to be there. If they see that you don't have it, then you're not going to get approved. You can't go forward with the process because the funds aren't there. So that's where the time comes in, where you have to save and come back. Another thing I want to touch on is that any funds that you put in your account, they have to be traceable, you know, for, you know, fraud, lending, all these other things that could come about. There is no cash that you can just present just out of the blue. Like, I got $10,000, you know, at home, or, you know, my cousin is going to loan me $10,000 and out of the blue, and it's not able to be traced because they're that may come up and be an issue as well. So just so you guys are aware of that, because that tends to be a issue a lot of times. If it's gift funds, it's going to need to be traced from that person's account as well. Many people are reluctant if they're giving gift funds to someone else to give their banking information, as well. So just keep that in mind. There are certain stipulations with that. So as long as you have the funds there, you meet all the criteria, the underwriting process should be smooth sailing. Just be honest, with your loan officer, because you can lie to your realtor all you want, or your real estate agent, your realtor, but your loan officer is going to find everything out. If they don't find it out, then underwriting is going to find it out, some way, shape, or form. And that's going to make everybody frustrated at the end of the day, especially yourself, because you're thinking you got everything planned out, and you telling everybody, but you got your family all excited, ready to move in, and you got this thing hanging in the background that's stopping you from closing on your home. Something that could have been a 30-day close or a 35-day close, 40-day close could turn into 8 months, right? And we don't want that. We don't want that 8 months thing going on. So with that being said, I just wanted to do this video. I hope this video has been helpful. I know I've been talking a while. It's been almost 30 minutes, but I hope it's been helpful. I don't know if anybody trying to go back to where it shows. Okay. If anybody's got any questions before I get off here, please feel free to ask. If you have any questions, just in general, in reference to the home buying process and things like that. Said, I just wanted to do this video before I exit. Talking a while, almost 30 minutes, but I hope it's been helpful. So if not, I'll go ahead and make my departure. I got my link here. My link should be in the description as well. If you guys are interested in learning more about the home buying process, or you're interested in buying, please feel free to contact me for obviously a free consultation if you're looking to buy, ASAP. My Calendly link, you see it here, scrolling across. It should also be in the description. Just make sure you set up a time that works for you. If you're not sure where your credit is at, or you would like me to check your credit, we can definitely pull your credit. It's not going to affect your credit score or anything like that, and see where you're at, and kind of, gauge where you need to be at, or assist you to where you need to be at to get qualified, or put you in a position to qualify for a mortgage. If you're trying to look for a mortgage, if you're trying to pay for cash, that's cool too. If you're trying to pay with cash, that's cool too. Excuse me. So with that being said, I look forward to speaking to you guys. If you're interested, it's not as difficult as you think. So I will be talking to you guys soon. And if you're watching the restream of this after the live, if you have any questions, please feel free to comment them below, and I have no problem answering them. So I'll see you guys soon. Peace be upon you, and you guys have an awesome day. I'm out.